question. Let's just start with your view on Reliance Industries, which went up 3% yesterday. In this current episode of sell-off, which began the Wednesday before last, Reliance has been one of the big losers, at least had been till yesterday's rally. What's your view here?
Yeah, very good morning, Prashant, and to all the panel. And first of all, I would like to wish all the viewers a very happy Gudi Padwa and festive seasons. So I think if you look at Reliance, if you look at the quarterly results for the past few quarters, I think the core business, the O2C, the oil to chemical business, is something that has been driving the performance. While the erstwhile high growth businesses, that is of the telecom, that is Reliance Jio, and the retail business, somewhere that saw some kind of softness in terms of growth because of we saw in the retail business across the board footfalls coming off after the festive season. Consumption demand kind of took a backseat in the last quarter, and that kind of impacted the growth for the retail business. If you look at the telecom company business, that I think had been getting kind of slower growth because of the penetration and no increase in tariffs. But now I think with the strong rollout of 5G, they are expected to roll out 5G pan-India by December in order to take head-on with Airtel, which is also doing a faster rollout of 5G across the states, and the newer plans that would drive growth in the telecom business. Also in the retail business, we believe that growth would pick up with the aggressive expansion that they are doing, and also the revival in the consumption demand later half of the next year. So that should help these two businesses. Now coming to the core question of the core business, that is where the pressure is coming because of the fall in crude oil prices and the Singapore GRMs, which have come off from their highs, leading to pressure in the overall stock of Reliance. But I think that is now somewhere stabilized. Things would improve from here on. Going forward, we expect a strong growth in the core oil to chemicals business that should drive the overall performance. Valuations have definitely come off with about 20% correction. I think it's a good buy at current levels. We continue to have a very positive outlook on Reliance from a 1 year perspective. We currently have a target price of about 2,800 on Reliance.
All right. Hi, Siddharth. Morning. What about Vedanta and Hindustan Zinc? Street is always confused what's going to happen next with regard to the promoter entity. Now they've gone and paid a big dividend, from Hindustan Zinc, which flows to Vedanta and then flows to Vedanta Resources as well. How do you approach these stocks? Valuation-wise, Vedanta Limited is very, very attractively priced. The problem is the uncertainty. So your approach to both these two stocks?
Yeah, very good morning, Nigel. I think it's a very pertinent question. Again, looking at the high dividends that Vedanta has been announcing on back of the cash flows that it is getting from Hindustan Zinc, and B, on its own core business where we saw the upcycle. However, now the commodity cycle is on a downtick. We saw the numbers for Q3 where the PAT came off significantly on a Y-on-Y basis, as well as much below our expectation. The core question is that someone wants to play the dividend that the company is going to announce, then it makes a sense at current levels. If you look at the holdco, the debt which is due for repayment or refinancing in the next 6 months, based on our estimates, is about $2.5 billion. And of which in Q4 of FY23 itself, $550 million of repayment and refinancing is due at the holdco level, which is the Vedanta promoter entity. So definitely a bulk of this dividend that Vedanta would be receiving from Hindustan Zinc will flow back to the shareholders as dividend, be it the Vedanta promoter, be it government, and minority shareholders like us. So that is something positive. Already in FY23, the company has announced a dividend of 81 rupees, and to add to it, there could be another 18 to 20 rupees of dividend that could flow from on back of this. So if you look, if someone wants to play this, then I think it's a short-term play. Apart from that, we believe that the earnings would remain under pressure. Although valuations have come off, we still believe that it is kind of pricing in the current environment, which is an uncertain global environment with the recession looming in that US, Europe, which is a key consumer countries. China reopening had helped in between, but I think that will not be a strong factor going forward for commodities globally. And with LME prices coming off, I think at best we have a neutral rating on Vedanta, but I think bearing the near-term dividend play, we don't see a huge upside to Vedanta.
Okay, all right. So that request you to stay with us. For the time being, we'll slip into a short break. Up next, we'll get our technical experts, Mitesh as well as Sudarshan.